Hello, Whitby, and welcome back. Lots to cover this week, both in terms of your real estate market and what is happening in the mortgage world. Please stick with me on the other side of this intro, and we'll get into all that. Hey, everybody, it's Rob Marsiglio here from the Robert Marsiglio Realty Group, once again with your weekly Whitby wrap up. As always, I want to get right into those stats for you, but let's start with a little bit of mortgage news. Big announcement last week from the US Fed, which I kind of touched on my last video. I want to just go more in depth as to what is happening with rates right now for you as well, and what can we expect in Canada for the next big rate announcement that is happening in just under a month from now. Okay, so let's start with that. I'm on Stories here. Oh, great website. Lots of real estate related and economic related posts. And we want to start with this headline here. The Bank of Canada to follow the US Fed's 0.75% hike in July. Following the US Federal Reserve's move to increase the federal funds rate by 0.75% on June 15th, the largest rate increase since 1994, expectations are now solidifying for the Bank of Canada to follow suit, further amping up borrowing costs for consumers. The Fed's move was made in response to unexpectedly high May inflation readings of 8.6%. That's a 40-year record as well, and it brings its rate range to 1.5 to 1.75%. Canada's overnight rate is already sitting at 1.5%, and the markets were pricing in up until last week a more than likely a half point or 50 basis point raise in that overnight rate, which again we know affects variable rate mortgages directly. The reason that they were pricing in 50 basis points as opposed to 75 is because they did not think the US would go ahead with a 75 basis point rate hike. We kind of want to be in lockstep with the US from a Canadian perspective. So now that the US has gone ahead and said, hey, we're going with 75, we're going to be aggressive, Canada is looking to follow suit as well. So that announcement's already impacting us on the Canadian side. You can see here this big surge in the 5-year yield, which we've talked about. These 5-year bond yields are directly tied to your 5-year fixed mortgage rates. So these shot up just in anticipation of this 75 basis point hike by the Fed. You can see they've kind of leveled out in the days following, but again, that's what happened here, and you'll see on the next page exactly what that did to 5-year fixed rates in Canada immediately. So here we are back on Rate Hub, and I just want to draw your attention to this middle column here, the 5-year fixed rates. Everybody has followed suit now. I remember last week Scotiabank was up above 5%, flying solo up there, but now all the other big 5 banks have also come up to in that 5 range, the low one being CIBC at 5.02. The other thing to note now, and this is your 5-year variable rate, which we know is tied directly to the overnight rate, which if they do a 75 basis point increase on July 13th, all of these rates, they'll more than likely start creeping up prior, but kind of overnight will go up by another 75 basis points. So officially right now, CIBC, TD, and the Bank of Montreal, you are qualifying at the stress test number to get one of these mortgages, which is 5.25%. You're already having to qualify over that number at 5.35 and 5.4% to get into one of those products with RBC or Scotiabank. If you want to qualify for a 5-year fixed rate mortgage right now, you're having to qualify at least 7% according to that stress test. So if you see a slowdown, an expedited slowdown in the next little bit, you will know why. It's because people are having to qualify at higher rates than they have in the past 20 years. That stress test that's in place is really putting the pressure on people to maybe qualify at a variable rate mortgage if they really want to get into a place. If you're trying to get that fixed rate, like you can see, you're qualifying at over 7%. That's serious purchasing power that's being cut into for the consumer. So you're all caught up to date on all that stuff. With that all being said, let's hop right into what is happening in the Whitby real estate market for the week from June 12th to June 18th. We will get right into it with our new listings that we're always keeping track of. So we had 60 new listings this week, down from 61 the week before on the Detached side, and 11 new listings on the Townhome side, down from 13 the week before. And you can see our kind of highs over the last year was 85 in April, end of March for the Detached side, and 30. We kind of peaked at 30 twice on the Townhome side. How accurate are those new listing numbers that we already looked at? Well, let's take a look here at our suspendeds and terminateds. For the Detached side, we are down to 25, that number's been trending down for the past couple weeks. We had noticed a trend downwards last week in the townhomes as well. That bumped back up to, there was actually 9 suspended and terminated listings this past week. Our sales, big fall off on the detached side. Again, we'll do some little cleanup for next week's video in terms of there are some sales. You have a time frame to actually report those firm sales, so some of them may not be reported for last week, but again, a drop off of 10 on the detached side, and also down from 46, which is our high for the past year. Holding steady on the sale side for the townhomes, we had 8 sales each of the past 2 weeks, but down from a high of 17 sales. So that all trends upwards on the detached side. We're up to kind of 1.44 months of inventory. With all those suspensions and terminations on the townhome side, we've dropped back down below 1 month of inventory. Again, we always talk about smaller size of the market, more volatile that number is. It's much more sensitive to a change in either the number of active listings or the number of sales from the past 30 days. So once again, detached, we have 1.44 months of inventory and 0.88 on the townhome side. Now back to the number that everybody wants to see, and that of course is your median sale price. So this past week on the detached side, still just over $1 million, $1,010,000 was the median sale price for a detached home in Whitby, and on the townhome side, that number was $891,450. And down here, you remember last week I added in this kind of faded line on each segment, the 5-week rolling average of that median sale price. So on the detached side, we're looking right around $1.1 million, and the 5-week rolling average for the townhomes, $884,000. So pretty much in line with what we're seeing from this weekly median price on the townhome side. And lastly, our days on market, again, stayed pretty steady on the detached side. We had 9 last week, 9 this week as well, doubled on the townhome side. So smaller sample size, doesn't take much to throw these numbers off as well. Let me know in the comments below. Do you want to start seeing 5-week rolling averages for a lot of these stats to try and smooth these things out? I think it might give us a little bit better idea as to what the trends are actually doing. Let's wrap up with our smaller markets. So we'll start with the semis, and remember again, upper number is this week. Number in brackets is what happened from the week before. So held steady with new listings at 4, down a couple sales. Our 5-week rolling average bumped up to around 890,000. We have 9 active listings versus 11 last week, and that brings our months of inventory down to 1. So it would take 1 month to sell out of all the semis in Whitby if the pace of sales holds steady. Condo apartments, down a couple listings, but we are up a few sales. The 5-week average for that price is down about $3,000. Couple less active listings on the market, and therefore our months of inventory is down to 1.44 from 2.14 the week before. And we'll wrap it up with those townhomes. 6 new listings versus 8 last week, 1 sale versus 2. Our 5-week average price is up to just shy of $700,000 for the condo towns, 1 less active listing this week than last, and our months of inventory is down to 2.14. Now in terms of our showings last week, you may remember this June number was down to 12.7, so bit of a pickup in showing activity in this past week. Again, the reason for that may be some expiring rate holds. People need to get into the market before those expire. Again, week to week, that number could change a lot, especially when you're seeing less listings out there. And lastly here, this number bumped up by 0.02% as well, but we're still down 9.43% from May, seeing less than 1 offer per listing across all property types in Whitby. So that's it for another week of the weekly Whitby wrap-up for June 12th to the 18th. As always, let me know what your thoughts are on the data here. Do you have questions about your neighborhood specifically? Please always feel free to reach out. If you know of somebody looking to move into the area who is just kind of wondering what is going on in this market, please send this video along their way. Make sure you like it if you're getting good value out of these videos. Subscribe to the channel so you don't miss any of these going forward. My goal is to kind of provide this information to you every single week. I don't like doing the whole junk mail, ad mail thing. I'd rather it be here on a platform living for you that you can check in every single week very easily. So please, again, share it with a friend, like it for yourself. Until we speak again next time, stay safe and cheers.